How's it going, everyone? It's Sam. A lot of retail traders are about to lose everything, in my opinion. And I'm not bearish on the market, on crypto. I talk about crypto every day. I'm super bullish on crypto long term and even over the short term. But there's something that keeps on happening. And I think a lot of people are getting this wrong right now. They're getting very greedy. And again, I'm not talking about necessarily even crypto specific, but in traditional markets. I see something going around crypto Twitter, and this is just going to wipe people out. And it's going to bleed over into crypto as well, where people are going to make stupid decisions. And they're not really looking at what's important, right? So I want to explain what I mean by that, because I feel like I'm speaking in haikus right now. But I also want to give you some of the good news on the market too, because this, if you're watching this channel, there's a good chance that you'll avoid what's happening right now, but you have to be careful. So let's go over some of the positive news as well as what you have to be careful of. If you don't mind, hit subscribe so you can see future videos just like this. If you watch the videos and you don't hit subscribe, you'll probably still get some of my videos in the future, but you might miss a couple here or there. And they could be important videos if big news is happening. If you want to start trading crypto, check out the link underneath the video to BYDFi. We just got done with this big trading promotion where we're giving up to $13,000 bonuses. I'll probably have more news on that either later today. I'll put it in the Telegram too, but we'll talk about how much money people got from this bonus, how much BYDFi gave away during this time frame. We're going to load up another one of these events, the same event, right? So if you just got $2,000 or something, you could get another $2,000. So yeah, check out the link underneath the video. We constantly run these. It's not just for new members. It's for everyone that's ever signed up. Now, Bitcoin still sitting right around that $121,000 to $123,000 range. It's just been bouncing around here. This is pretty awesome to see, like 4 or 5 days in a row with Bitcoin over $120,000. So Bitcoin's doing well. It might not seem super exciting right now because we see other stocks and other assets like gold and silver continuously moving up, and Bitcoin just kind of bouncing around. But keep in mind, it's still doing really well. You zoom out and it's one of the best performing assets over the last couple of years, basically just up and to the right. So we have these times where it bounces around, does nothing, and then it goes up 50%, and bounces around, does nothing, and then goes up 50%. So just stay calm, right? Stay patient. I know that's hard to do, but yeah, we'll have to do that for a little bit longer, it seems. Over the last 24 hours, we had $376 million of longs liquidated, and only about half that liquidated from the short side. So Bitcoin's still doing well. I still think there's a lot of spot buying and then just some manipulation and some longs getting liquidated. The traditional markets are slightly red this morning. Powell spoke, but he did not comment on monetary policy or economic outlook in the welcoming remarks at Community Bank Conference. So really, nothing burger. It was a nothing burger. He spoke even during the government shutdown. President Trump yesterday, though, shed some hope on global peace talks. He says Hamas and Israel have signed off on the first phase of his peace plan. Obviously, there's still Hamas and Israel. There's still Ukraine and Russia. There's still global uncertainty with tariffs. So there are some silver linings or some tailwinds that could happen from a macro perspective as well. We still have hard assets going up continuously. Silver hit just about $51 earlier today and still sitting over $50, hit a new all-time high, to be clear. That's a new all-time high. And it's been a long time since it's hit an all-time high. I mean, look at this. It was 2011. We had this massive spike from $18 to $50 basically in less than a year, or right about a year. Now it's finally gone up. So congrats to everyone that's bought it recently. It's been doing well. Gold also over $4,000. I mean, this has been a historic run for gold, kind of similar to what we saw back in 2008 when people were trying to get away from maybe the US dollar after the banking crisis. So congrats to everyone that's in gold too. It's doing great. Bitcoin, like I said, still doing well, but taking a bit of a back seat to gold and silver at the moment. To be clear, Bitcoin's usually a bit behind, like time-wise. If gold pumps, then Bitcoin pumps later. We still had a big inflow day for the Bitcoin ETFs, mostly just BlackRock. Like FBTC has had 2 0 days in a row, while BlackRock stacked $1.3 billion just the last 2 days. So far this week, it's stacked nearly $3 billion worth of Bitcoin just incredible. It's incredible, right? If Bitcoin goes up another 2 or 3%, it will make IBIT $100 billion. It will make it the fastest ETF to ever hit $100 billion. The Ethereum ETFs had a small inflow yesterday. Again, just basically IBIT carrying the entire load because we had a couple outflows and nothing else had inflows. So BlackRock just stacking like no one else. Luxembourg Sovereign Wealth Fund, FSIL, became the first Eurozone state fund to invest 1% of its holdings in Bitcoin ETFs. That's actually pretty impressive. A lot of these sovereign wealth funds and a lot of just funds in general have a hard time getting up to a full percent. If you look at BlackRock, right, they're very pro Bitcoin, but even in their own funds that they've started to allocate Bitcoin to, like they'll put IBIT within a global allocation fund, but they put very small amounts. I mean, we're talking millions of dollars in billions of in a $1 billion fund, right? So it might be like 0.08% or 0.12% or something like that, like an order of magnitude away from this. I think there are going to be more and more funds that do this, and this will cause a lot of money to go into Bitcoin. Sovereign wealth funds have a lot of money, a lot of capital, and they're hungry for returns right now. You can actually see a lot of sovereign wealth funds in the Middle East allocating heavily towards tech right now. So I think this will continue to happen. And that's going to be a huge tailwind for Bitcoin. Now, with all that in mind, let's talk about the caution I have right now. I saw this message yesterday, or I saw this tweet. I think a lot of people on FinX or financial Twitter, basically, should be judged by their year-to-date performance, not their portfolio value, not their age, but the one metric that is standard across everyone. Year-to-date return is the most fair way to compare to others. With that being said, what is your year-to-date return? And they show 135% up year-to-date. I think this is somewhat valid, right? Like, you shouldn't necessarily be judged on your portfolio value, but also your portfolio value does show something about you, right? If you have had really good returns for a long period of time, I think that's much more important. Not even the portfolio size, but how you've done over time versus just your portfolio value or your year-to-date. I think a lot of people are showing their year-to-date portfolios. Let's go back here. This person shows 104% year-to-date. This person showing 135%. Reached 50% year-to-date return. Not bad for a rookie. My returns are 30% year-to-date. Okay, you have to be very careful of this. This is where people will lose everything because everyone is showing their year-to-date return. And I guarantee you, anyone that's, hundreds of percent or 100% in year-to-date return is probably doing something fairly risky, especially in traditional finance. I mean, you can, some people might say that crypto is more risky, but if you're getting 100% year-to-date return, you're probably in just a few stocks, and you're in like big momentum stocks or meme stocks, or you could have just nailed it perfectly with one big purchase. Like maybe you bought Meta back when it was $80, and you've rode that up for years. But like this year, we're seeing a lot of stocks go up heavily, and people just aren't adjusting for the risk, right? Like I say, a lot of stocks. There are like maybe 10, 15 stocks that retail investors are buying right now that have gone up a lot. But you have to be careful looking at just year-to-date returns without accounting for risk, because I've seen this many times. I mean, I saw this like bigger numbers than this back in 2021. And I'm not saying we're in 2021 and that we're going to have a 2022 crash, but just looking at year-to-date, this tells you nothing about the risk. It's kind of like going to the casino and like flipping a quarter, or like going on and playing the roulette table and going all in and then you win, and then going all in again and you win, and you're like, hey, look, I'm up 300%. That doesn't really tell you about what you're doing to get there, right? If you're buying call options on risky stocks and you do that and you win a couple times and you're going all in every time, there's a pretty big chance that you could just lose everything. I think this will happen to a lot of people that are showing, 100% year-to-date returns. Again, not everyone, right? There are some people that are just really brilliant people that are getting really good returns that took the proper amount of risk. But then there are also, if I see this 50 different times on Twitter with people showing 50 to 100% year-to-date returns, they're probably taking too much risk. Right? You don't get 100% return without taking a significant amount of risk. And yeah, I'd just be careful of that, right? I saw someone showing like a 10,000% return. And if you understand the risks, that's okay. I even like what I do, right? I use some leverage and I've been able to get, 100% returns on a lot of different trades. But this is a small portion of my portfolio. And I know there will be people in the comments, you're just saying this because you're salty because you haven't gotten 130% return. I was investing heavily into Bitcoin around $30,000, $40,000, $50,000 Bitcoin. So I've gotten really good returns over the last couple of years. And I've done really well, but I'm also diversifying. So that way, if we go into a bear market, I'm not going to get my portfolio wiped out and then leave, right? I'm not going to sell at a loss or just lose out on assets completely because I've gone too risk on. I'm going to take profits off the table. I've said that many times, especially on some of my more aggressive positions like leverage trades or on altcoins as well. I'm going to do that, which I think a lot of people just won't do with some of these, risk on trades. This person showing 1,000% 2-year return. Again, I'm not pointing out anyone in specific because I don't know what their portfolios are. I don't know how much risk they're taking. I don't know the risk profile or anything like that, but just be cautious, right? If you are someone that's like showing your year-to-date return, be cognizant of the amount of risk you're taking because someone with a 30% year-to-date return might be doing a lot better than someone with a 50% year-to-date return if this person's just buying call options on volatile stocks and just happens to time it right. And then this portfolio goes down 50% if we see a 15% drawdown, right? Like, be careful out there, right? Make wise decisions. Make sure you understand your risk tolerance because everyone feels like they're very risk tolerant in an up-only market. But when you see a year or 2 years or 3 years worth of your job, like what it would pay you, when you see that go away because the market turns down, you will not be risk tolerant anymore for the most part, or a lot of people won't be. So just be careful. Hopefully that makes sense. I feel like I might have been able to explain it better, but hopefully you get it. This is interesting. This is a interesting opportunity. I'll probably buy some of this. Staking ETF coming to Solana by the Grays to do it, Bitwise Invest. So Bitwise is one of the major Bitcoin ETF issuers. And they're doing a ETF with just 0.2% fees, and they're going to have staking, looks like. This could be interesting because Solana staking pays anywhere from 4 to 7%, and they're just charging 0.2%. If you remember the other ETF, what was it? Grayscale. The Grayscale Solana ETF is the first one to include staking and has 2.5% fees. I don't like Grayscale. I just don't like Grayscale because of these fees. I mean, they gave access to investors before a lot of other ETFs. They gave Bitcoin access, but they just charge such a large fee, and I feel like it's so short-term minded. Like they're just trying to take advantage when people don't have access via other means, and they're just charging an exorbitant fee. This is 1/10 that fee, a little bit less than 1/10. So I think this is pretty cool. You'll be able to get dividends, or maybe it'll be added back to the fund to increase the NAV, but I think it would make more sense to give dividends, honestly. Let me know your thoughts on this underneath the video. Let me know your thoughts on like these incredible returns. Again, I've had good returns. I'm not sure I've hit 100% year to date because Bitcoin hasn't really done too much. And, a lot of big tech names have done like 40, 50% or something like that from the bottom, maybe 60, 70%. But year to date, they might be up like 15 or 20% or something like that, 30%. I'm mostly just invested in big tech, S&P 500, NASDAQ, and Bitcoin, really. And then I have some real estate too. Let me know your thoughts on this underneath the video. If you want to trade Bitcoin, if you want to trade altcoins, check out BYDeFi underneath the video. We're gearing up for another one of these events where you can get free money. You might as well get it. If you're going to trade, try out BYDeFi. I really like the platform. And through our Telegram, you can actually get access to someone that works directly at BYDeFi, which is incredibly important during a bull run. Because what happens if your money gets stuck on a platform? What happens if you have a question or there's some glitch in the system or something and you need to access someone at the exchange? You might not be able to with other exchanges. You can at BYDeFi. Thank you so much. I appreciate it. I'll see y'all soon. Bye.